I'm Matt Bichard with REIT.com here in Atlanta for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me today is Matt Werner, portfolio manager with Chilton Capital Management. Matt, thanks so much for joining us.
Thanks for having me.
Now, the REIT market has been performing very well so far, outperforming the broader markets year to date. How would you describe valuations at this point, and are you seeing good buying opportunities?
Sure. So anytime the market goes up by almost 30%, you're going to have questions about valuation, especially when it goes up more than the S&P 500 or some of the broader indices. I think a lot of that was a catch-up from last year, where REITs were not up as much as the S&P. But even so, we have been hitting peak levels on the RMS, and but even so, today we're looking at dividend yield spreads over the 10-year that are pretty much in line with historical averages. Same with the implied cap rate spreads. AFFO multiples are above historical averages. However, the properties are a lot better today than they were when those averages were created. And we're NAV-focused investors, and REITs are trading just in line with their NAV today. And given the low risk with these companies, I think that there should be a much higher premium to NAV. In terms of buying opportunities, we're seeing a lot of opportunities in the mall sector. There's been, they're trading at discounts at NAV, although they're experiencing very good growth. The lodging sector has had a lot of volatility despite showing very good growth numbers, so that's been creating a lot of buying opportunities as well.
And we've seen a few examples of REITs looking at their balance sheet and simplifying their business models. Do you think that's a trend that has more room to run in 2015?
I hope so. I think Simon and Werner spinning off some of their shopping center and mall portfolios, they're going to be rewarded if they haven't already. And I think that they are, they have been leaders in the industry for a long time, and hopefully others will follow. I think that it also creates more opportunities for M&A, which would be another driver of multiple growth.
And Houston was recently named the top city in terms of real estate prospects for 2015 by both PwC and the Urban Land Institute. Are you anticipating increased interest in some non-core markets like Houston?
Yes. Well, we live in Houston, and I would call it a core market now. Although I do agree that in the past it was sort of a secondary market, but it has, by getting that regard, I think that it has kind of put it on the map as a place to hold value and a good place for foreign investors to put their money. And I think it depends on the property type. In terms of office, I don't think the REITs are going to be going too far out of their bailiwick. But when you're talking about warehouse space or data centers or even strip centers, some of those secondary and tertiary markets are the ones that are having the best job growth, which is where the REITs really should be.
Great. Matt, thank you so much for your insights.
You're welcome.
For more on this and other REIT news and analysis, be sure to visit REIT.com.